What's up, day traders? My name is Jason G, and this is your market weekly rundown with Responsible Day Traders. Today is Monday the 17th of July, and we're going to be doing a little bit of technical analysis on the E-mini S&P 500 futures, see if we can work out what we can expect for this week in the markets. So as always, we're going to begin with looking at the news we're expecting this week. Okay, so on our website here you can find up-to-date news forecast. This is what we're expecting for the rest of the week, and I've highlighted the high volatility news for the US markets. So tomorrow, Tuesday, we are expecting a few news events, Wednesday and Thursday also. So on Tuesday we have core retail sales and retail sales, quite a big one here with the crude oil inventories on Wednesday, and also a busy one on Thursday with initial jobless claims of PMIs, some home sales. So we should get some volatility in the market. If that's not something you're used to or trading around that, then you definitely want to be stepping to the side 15 minutes before, at least. Really let the price action calm down before you get back into it, maybe 15-20 minutes after. Okay, so let's jump to the charts. Okay, so I have my charts loaded up here. This is the September contract on the ES. Right now I've got the 4181, 1597, 233 triple chart set up here. This is my normal configuration, but we're going to start with a sort of top-down approach, looking at the daily and working our way down through the charts here. So let's open up the daily chart here. I've already prepared a little bit of the technical analysis, got some markings here to look at. So I'm using tick charts, and if you're not aware already, on a daily chart, each one of these tick charts represents a day in the market. So looking a bit further back here, from beginning of the year, you know, we had this trend to the downside, some real big movements to the downside, and I've marked out a trend channel from what I believe, you know, is a time where we entered the trend channel, and we've got the extremities of that channel. We've got the 50% line running through the middle here. So yeah, I think this is pretty good and accurate trend channel marked out here. So this is the main channel here, and then we actually broke out of it. Now if you look at some of the areas where we've paid respect to this trend channel, I think you'll see that it's fairly accurate. A lot of reactions you can see over this trend channel line, and we finally, we break out a couple times, a few false breakouts, and then we finally break out, pull back, put in some support. We get a crossover on the EMA, and that is the beginning of the move to the upside. This has been, this is about a month's worth of price action here. And with this next trend range, all I actually did was I just grabbed a copy of the exact same trend range. That's 100% from the lower part to the top part, and then just duplicated it here to see if we are following that same 100% range as we move outside of it, and looks pretty good. So we've just hit the 50%, bounced off of it, pushed through, and it just helps us gain an idea of where 100% extension is from breaking outside the original 100%. To where the next 100% is. So potentially we could be moving up to this area here over days or weeks, can never say for sure. We've also marked out a few other areas on the price action here that I believe are sort of significant support and resistance areas, or areas where we can expect a bounce. So we are approaching one of those areas right now. Let's take a look at roughly where that price action is there. So it's quite a bit away. It's about 35 points away, where I would say the first area where we could really expect a reaction or a sort of bounce if we are going to continue to the upside. It's about 30 points away at 45.88. You can see we've got quite a few significant pivots in that area of support and resistance previously. Might react there, might show some respect, or might just push on through to the next one, right? We never know. But hopefully this just gives you an idea of the sort of areas I'm looking at. In terms of the price action itself, pretty strong move to the upside over the last 6 weeks, month and a half, yeah, something like that, since we broke out of that area. EMA's crossed over and they're looking quite strong to the upside. As I mentioned, there is areas of quite significant resistance areas, so we're going to see whether the bulls have got enough strength to push through here or not. So keep an eye on that. We are quite extended, maybe even overextended away from the EMAs. We've had a nice big run, retracement, shallower run, retracement, and then quite a good push up here. So we are pulling away from these EMAs, so there always is the potential when we do stretch away from the EMAs for a sort of snapback move, where price could just pull back to that EMA, or maybe just to retest this 50% line before deciding whether we're going to push on to the upside. So let me just sketch out a couple scenarios. We could, that first scenario there is pull back, push on up, who knows how far, potentially up to there some point. Okay, that's quite some way away, so let's keep it real. We're looking around maybe here in the next week or so. We take away that one, we could just fail, maybe try and bounce off that area and just push back on the inside here, maybe pull back, find a bit of resistance and start to make our way down, maybe for a deeper retracement to the slower, higher time frame EMA. Well, there's not actually a higher time frame than that, but it's just a slower EMA. Or we could just keep on gunning it to the upside and not look back. So a few possible scenarios. Let's take a look at the MACDs and see if that helps us determine which one of those scenarios may be more likely to play out. Well, one interesting thing on here, if I just scale this in a bit, if you look at this, we do have quite significant divergence. Okay, so we have these sort of free pivots here, which line up with the free pivots on the MACDs. We're making higher highs on those frees, and on the MACDs here we're making lower lows. That's textbook divergence, which would probably back up the scenario that as well, given the fact that we're heading to a resistance area, that we might find ourselves retracing somewhat to get back in alignment with the MACDs. The MACDs do, or these BBs on the MACDs, they do have quite a bit of work to do to sort of catch up with price. And if that's not going to happen, then you can expect that to definitely be pulling back at some point. So we'll keep an eye out for that. This is a daily chart, so that can take a few days or weeks to come to fruition. Other than that, the other thing to keep in mind is that we are in a trend to the upside, right? This has been a fairly strong trend, or the beginning of a trend to the upside, really starting over here actually, when we put the bottom in and the really strong flag reversal pivot, and we start making our way up, a little bit of consolidation, and then finally we broke out of that range, and we've got a lot of impetus there and a lot of strength, momentum. So it's always something you need to pay attention to, the fact that we are heading to the upside, and we don't want to fight that, right? Doesn't mean to say we can't take trades in the opposite direction, but we've got to be realistic about our expectations of how far they will go in the opposite direction. So we're looking for pullbacks to areas before price decides to continue to the upside, until we see a change in the status quo, complete exhaustion to the upside. But right now we're in an uptrend, and we can expect that to continue with those intermittent retracements, deeper retracement opportunities. All right, let's move on to the next lower time frame. So moving on to the 28,657, and you can see the same thing, just scaled in a bit more. We do have there's an extra pivot there. Really, we should mark out the same picture showing up on this time frame with the divergence. We're putting in higher highs, slightly higher high there, and lower lows. So clear and significant divergence. EMAs are strong and wide apart. but there's always the potential for it to do something like what happened over here, right? We sort of get too far away from the EMAs and then we want to pull back to them, and then, you know, even deeper, or break straight through them to a lower level. So I'd be paying attention to this sort of area here as the next intermediate area, where if we do make a move down, that is where we would potentially expect to move to. This is not really much significant resistance in this area. This is the sort of key area. You know, you've got support, 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 support turned into resistance, resistance. So this is a very key area around 4490 to 4500. So 50 points away, but we could start to make our way down there in a sort of complex fashion, runs and retracements, as we pull back potentially. So if you see that, you know, the MACDs are saying that's looking likely to happen right now, but you can never rule out that the trend is so strong that we can just break that and reset that divergence and just continue to the upside. So we're going to keep an eye on that. Okay, let's jump down to the 4181 chart. Okay, and you can see already, you know, on this chart here, we had some quite nice retracement divergence there. So you can see that little pullback there. Barely showed up on the MACDs, right? But then you do have a move down. We found a little bottom there, and we put in a sort of 50%, 40-50% retracement there against that move. You can see it just barely showed up, indicating a real strong retracement divergence, and that move is an exhaustion move to the upside. Failure to continue, that retracement divergence is too strong, and the price moves back to revisit the slow EMA. This will be the 10946 mid band. That's how they're laid out on our charts. It's come down with a fair amount of strength. We'd call that actually a super retracement divergence, because we didn't even break inside the Bollinger Bands there. We just stayed on the outside, or we skidded off of it, right? And yeah, still a lot of strength down. Marked out an area where we could bounce on the MACDs, and you know, MACDs kind of work the same way in terms of areas of where we can expect bounces or levels, the same way as EMAs or price action or anything really. We revisit them all the time, and this is a key area here where we bounced off of it. So I would expect us to at least get down to there, and we'll see where that price actually, how far that price needs to go to get down to that area. I'm going to be paying attention to what happens when that does happen. If that's within normal trading hours, it probably won't be. And then, you know, we do have this sort of extreme MACD all the way down here, so we could keep on going right down and revisit this previous one down here, maybe. Keep an eye on that. But it's strong. Look at these big strong bars to the downside. Let me just clear this away so you can see things very well. Really strong. We didn't even really, you know, put in a little bit of support here. Seeing it's got a double bar there, you know, see if this is going to hold. Maybe we show a reversal pattern, then okay, we're going to get back into it to the upside again, maybe. But with that sort of strength, and just what's happened on the MACDs, I'm expecting a deeper push down here. If I was going to pick an area out, I'm going to go with the next intermediate area, which is down here. You know, and if you want to go, if it keeps going, then we're looking at this level here, so that's quite significant as well. Okay, a couple of levels, and that'll be your extreme level there if we do make it down. So those are the sort of areas I'll be paying attention to on the 4181. Okay, let's have a quick look at the triple chart setup here. So I've marked out some of this stuff. You can see how that lines up against the 1597. Where are we now? Next stop is just over here, where I've marked this area out here. So you can see that's about, we're at 45.49 at the moment, 45.46. Easily gonna pop down there. You can see we're just getting the crossover on the EMAs. You never know, because we are in an uptrend, so this could just be a deeper, more complex retracement to the downside. You know, we could put in a bit of support and just push on up. That's probably going to happen at some point, but yeah, this is, you know, if we do continue to be downside, that's where we're heading. At least maybe the next level at 45.42. To be honest with you, most of this stuff will just happen on the pre-market session. And that's it for the market weekly rundown. As always, guys, if you have any questions or comments, feel free to leave them below, or you can reach out to us across social media or on the website. This is your market weekly rundown, and I will see you on the other side.